Good evening. I hope you enjoyed today's market, and I'm going to update the conversation we had pre-market at 9 o'clock. Dan and I come on every day between 9 and 9:30 and talk about what's happening pre-market. And if you remember, this morning pre-market we talked about the potential for a breakdown failure or a sucker move up. What do you mean by sucker move up? Well, markets were gapping up this morning and we had a breakdown failure pattern that was in the making. And we were assessing that potential for that to follow through. So, failure patterns are really powerful patterns. And as we ended last week, we had a reversal that set up a continuation pattern lower within the existing downtrend. Now, continuation patterns within downtrends are something that we obviously look for to follow through. However, after a greater than 100% retracement, which is what happened here, right, looking at the weekly chart, see that breakdown. And when we were looking for this reversal last week, and it did occur, and then the news came out and pushed markets lower. All right, fine. We had this breakdown and the negation of this large green bar. It's not uncommon within a downtrend. However, you see the green bar here was negated and we had a continuation pattern down. Well, this is much more reliable than prices having already moved down to the extent that they did and then taking out the prior low. After taking out the prior low, odds are you're going to get a reversal. Now, as traders within any time frame that you're trading, we're odds traders. And we apply our method. And one of the concepts in our method is that after a greater than 100% retracement, look for a slowing in momentum and the potential for a counter trend move. So this is what we're looking at right now. We had the breakdown, and today started out with the gap up. And I covered, well, in the green room today, pre-market or midday, about what was setting up. And I can go over that with you, just aware of what to look for as an intraday trader if you're in front of your screen as to what should happen. And let's just go to the cues here, because I explained both in the cues and in the S&Ps. So what had happened, and let's just go here to a 60-minute chart. For those of you that are intraday traders, I hope you find this very valuable. So we had that gap up. Think about what the daily charts looked at and the concept of a greater than 100% weekly chart. So that provides us a bias that we're going to get at least a counter trend move. So in the middle of the day, as prices moved up toward resistance, which you can see right here, right, there was a resistance area. And this was underperforming at the time. Since you look at the S&Ps, they had already moved up. So our conversation at the time, which the S&Ps were here, was that they had reached their initial destination. Now, could we get a bullish consolidation, which we did? So looking at the S&Ps, what I explained was, let me get my drawing thing out here, was even though it broke down under these pivots, I explained this is where buyers should begin to step up, and we'd want to see that buying begin to materialize in pivot lows. And what does that mean? That means that it began to create support. So we're not concerned with the violation of the trend on the 5-minute time frame because of what I explained in the higher time frames, daily, weekly time frames. We're actually looking for confirmation of our bias. And what has to happen is this now begins to build an area of support and begins to consolidate at resistance, setting up a continuation move. That was what were looking for in the afternoon. Now, looking at the cues, which were underperforming at the time, I was asked about a potential breakout. And so what I said was, no, not now at this point in time, because they had already run up into resistance and they were underperforming. I said, let's see if they can rebuild and have a continuation up to the next destination area up here. That was our bias at lunchtime. and that did set up, and we got that continuation move up. So recap, we had that failure pattern on the daily time frame. Right? So last week was the failure and the continuation. And while that could have went lower, it was a low odds setup to continue lower. But we needed confirmation that it actually didn't continue lower, and we got that today. Now what we need to see happen is it trade above today's high tomorrow, and then it'll hit this resistance area. It's not going to be easy to push up, but that is what should happen. And now we got a clear reference point of these lows that shouldn't be violated, or something obviously has gone wrong. So again, downtrend, initial breakdown failure. You got a nice reversal day today. We'll see if this actually follows through. On an intraday basis, prices have come up to some resistance area here. And so prices now begin to consolidate, and we'll see how far that pulls back, or the lack thereof. So one of the stocks that were quite bearish last week was Apple. And so now, that survived today, and we had a nice potent reversal back up again. So as long as this continues to move up, since it's in a lot of indices, it should be able to support a continuation of this short-term reversal that we see in the markets. So we look at some intermarket analysis, how one market is dealing with another market. What is that support? What is that resistance? How does it deal with that area? Does it show relative strength, relative weakness, and multiple time frames, and how that follows through? Now, this is a nice little breakdown failure. It's really clean on Microsoft. This consolidation, the break, it closes on the low, and then it gaps up. It's a shock pattern, and it closes deep into this congestion. So this is a really nice setup for a continuation move back to the upside. And there were other semiconductors did pretty good today. I mean, this is not as attractive as a Microsoft pattern, but semiconductors held up relatively well today, considering they've been under pressure for a long time. Even Facebook or Meta, that's broken down pretty badly, and looks like eventually it'll go lower. Looking at the weekly chart, it is greater than 100% retracement, but it's been under a lot of pressure there, and we'll see how much this can bounce. Now Tesla, on the other hand, was showing relative weakness, and that gap down today and just couldn't even get off the mat. So that was pretty bearish. Now, looking at interest rates that have been really pushing this market around, just been chopping around here, really not a big break in a big way. That was the 30-year. The 10 years would mostly been talked about. So this is the kind of fly in the ointment of the bullish case, in that while this is pulled back here, it's in an uptrend, and this is where buyers are going to step up. And so if they do step up here tomorrow, this really should fail. And I say, why should it fail? Because the weekly is extended, and we've got a climactic sell setup. And what typically happens when you've got a higher time frame that has reached a climactic point, we get an initial potential move up like this. And I'm kind of just drawing this out, which tomorrow could be a potential consolidation day. Let's just turn this green for a moment. Turn that green. So let's just imagine that we get a green bar tomorrow and the market consolidates. It holds up relatively well. And then subsequently it fails, creating a measured move lower down to the next support level. Let's just call it here for the moment. So if that would be part of our playbook to provide our bias, and that tomorrow is a consolidation day for the broader markets, and then this little buy setup actually fails, and we get a continuation of this climactic setup where that begins to pull back, right, to wherever that might pull back. So we're just going to take it up. We're not about predicting, we're about just seeing what happens and looking at the next support level. So once this lines up with a buy setup, since it's in an uptrend, little extended, and this pulls back to support to form a buy setup, that's where we would really be looking for the markets to then experience the next down move within this bear market. So we'll see how that plays out. We look at the setups, we look at the patterns, Intermarket analysis, we see how that sets up to guide our existing bias, and then we adjust as time goes on. Taking a look at Bitcoin, that didn't do much of anything today. It's been sitting here on the edge of the cliff, so to speak, and looking at the monthly time frame, you can see why it had this big move down and hasn't been able to lift up. So we'd want to see Bitcoin at least begin to stabilize, try and move higher. That would add some bullishness to the short-term reversal that we saw today. If it breaks below these lows, I think the market's going to see that as a bearish event. Silver was having a good day today, bounced up in a pretty big way. And gold, on the other hand, it moved up and it bounced up nicely. But this is broken down. Let's just go to the weekly chart here and see a little more clearly, a little more detail. It pulled back a lot, and this broke down under the lows. So what you want to keep an eye on here is the dollar, which has begun to pull back. Where is that? Right there. So these short-term pullbacks where prices have gotten extended, the dollar and interest rates have been pulling back, that intermarket relationship or inverse intermarket relationship, this pulling back, metals start to go higher. As you can see, XME was an ETF that bounced up stronger than the broader markets. So let's just take a look here at some of the broader markets and looking at these ETFs, spreading that out. And you can see these are the S&P ETFs. So sorted here by percent change on the day. Energy did the best, but it's already up at resistance. Materials, which typically in a bear market do absolutely terrible, and these have been doing absolutely terrible. You can see the big topping pattern and the breakdown. So what we have happening here is just a short-term move up against this bear market trend. The weekly is in a downtrend, and the daily is in a downtrend. And this pops up to some resistance. There'll be sellers again. And technology, that's stabilized. So by no means is any of these reversals what we would refer to as a no-brainer, but looking for counter trend rallies in the short term makes sense based on the criteria that I've already explained. And we'll see how far they can retrace, and that'll tell us a lot out of the potential for whether this low might hold and to what degree it might hold on the next sell setup, which absolutely is going to be coming just based on the multiple timeframes and downtrends. Let's see, industrials broken down, utilities, which got destroyed over the last couple of weeks, communications just stabilizing. And as you can just see the extent of this bear market as prices have been trending down there. And of course, the S&P 500 ultimately, I think, coming down into this level here, the next leg down should be what sets up the bear market low. It's a significant support area, as you can see. This was the pandemic low, and then this was this congestion that happened over a few months there. Financials held up. Okay, everything held up, but nothing that just looks like, wow, this is a fantastic turning point. Healthcare, real estate, as interest rates pull back, it does better. Even staples, which got killed over the last few weeks, and consumer discretionary was the underperformer, and that is not a good thing. In a bullish market day, that consumer discretionary didn't do well, but I think Tesla was probably the drag, and you can see in the minder here, the individual stocks, as I click that particular ETF, the stocks in that ETF. So we can see Tesla was the big drag, down 8% on the day. And then, Carnival was down. That was doing badly and so on. And excuse me, what was doing well, different auto parts, Caesars, but none of these look like, screaming buys, just counter trend rallies. Energy, looking at the winners there, they just had the biggest day, but up into resistance. And so this is part of what we do and how we look at our different sectors by looking at the particular sector and the trend, then looking at individual stocks within those trends, part of what we call our factory work. And of course, we got different scans. They're looking at wide range bars. Um, you know, that popped up nicely, and energy stocks. So different scans, sideways moves and weeklies and bearish trends, of course. So bearish wide range bars, and there's Tesla breaking down. It says it's going to go lower. So I hope this helps. We'll see how things play out in the morning. If you have any questions, email me, Greg at Master Trader. But we'll be back online tomorrow morning at 9 o'clock, and we'll update accordingly as to what's going on. So we'll talk then.